You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of indeterminate length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Wednesday, 8th day of August, 2018. 8/8/18. Well, there you have it. Happy Wednesday to you. Once again, the hump day, up and over the hump and onto that downward slide into the weekend, depending upon your time zone. So if you're already there, congratulations, and we'll catch up to you shortly. Thanks for tuning in today, whoever you are, wherever you are. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We're just glad to have you with us. Now, if you can't see the chart I have up of the S&P, go to our homepage, cfrn.net. On the right-hand side, click the big microphone, follow the instructions, and you'll be registered in about 30 seconds, and that'll carry you all the way through the end of the month. First of each month, you re-register, and you only have to register once per month, and that gives you one-click access to the show every day of the month. We dual stream at youtube.com/CFRN/live. If you find yourself out and about, up and away, or should the go-to ever go down, then you've got that page bookmarked. one-click access. Okay, now let's see what's happening on this big blue marble upon which we live. So much to we'll start with Coinbase. Users of Coinbase will be able to buy digital coins right after they deposit funds from their bank account. Now, this was explained in a blog post today at Coinbase. Starting today, we're rolling out the ability to trade cryptocurrency immediately after a purchase. No more waiting 5 days for funds to settle. So anyone that's done business with Coinbase, you know about the 5-day settlement period, and all of a sudden, no more. While the platform supports instant transfers via wire transfer and debit cards, purchases via direct debits from a bank account used to take days. The change means that from now on, the USD balances will be credited immediately for the amount customers have sent from their accounts. They'll be able to buy cryptos, but won't have the option to withdraw before the funds from their bank are settled. The company also announced an increase in the daily trading limits for US users. The functionality will be available over the next few weeks. If you're a verified customer, the maximum allowable purchase will jump from 25,000 weekly to 25,000 daily. The exchange also noted that once the funds are transferred to Coinbase, there are no longer any limits to how much users can buy or sell at a time. Initially, the instant purchasing, new trading limits, and the ability to withdraw coins will be available only to US customers of Coinbase. And again, that's if you're a verified customer. You have to go through the whole identity verification process. The platform promises to bring the updates to other markets besides the US shortly. In a separate announcement, the influential US exchange informed its clients of the successful completion of its final testing for the addition of Ethereum Classic ETC, noting that the launch will proceed in 4 stages: transfer only, post only, limit only, and full trading mode. Coinbase Pro is now accepting transfers of Ethereum Classic. This came out in a tweet. Customers were notified they could immediately transfer ETC to their exchange account. Singapore-based digital asset exchange Alphabet Cryptocurrency, ABCC, has announced the opening of its European headquarters in Malta. In an official release, the trading platform described the move as a strategic decision and part of the commitment to increase its presence in Europe and elsewhere. The company hopes to create new investment and employment opportunities in the island nation, which has taken steps to become a leading crypto-friendly destination. I think we'll be hearing an awful lot about Malta in coming days, weeks, months, and years. The new Silicon Valley, perhaps. And in other related news, how many people use the Opera browser? Do you remember the browser wars? John and I were talking the other day about Netscape Navigator. I mean, that's got to take you back to your AOL days, sort of. The Norwegian browser maker, I didn't know that they were a Norwegian company, but I used to use Opera quite a bit because it's always been a quirky little browser, and it would always do some things that, you know, the other guys just didn't do, couldn't do, or didn't want to do. The Norwegian browser maker explains that the desktop wallet rollout is designed to tackle 2 main issues for its users. Oh, what wallet? Yeah, this was bound to happen. It's just interesting to see that Opera was the first there. I don't know of any other browsers that come with a digital wallet intact. But then again, I don't know a lot of browsers that come with a virtual private network already installed. All you have to do is turn it on. I know, mind-blowing. And am I still working on a partner's version of a browser, or a dedicated partner browser using Opera as the backbone? Yes, yes, and yes. It does a number of things that other browsers, well, the VPN is one, messaging is another, screen recording another, things that we typically have to go to outside apps, third-party clients. Opera just has it all under one roof. So why aren't more people using it? Well, it's probably a good question. The browser is used by 322 million people. The developers say this is due to the overwhelmingly positive response of the crypto community and users to the crypto wallet in Opera for Android. So they rolled it out on the mobile Android app first. Opera users will no longer need to install and set up an extension in their PC browser, just to connect the browser with the wallet-enabled mobile app by scanning a QR code, which will grant them access to their mobile wallet. Secondly, the phone's secure system lock will be used to store the keys, allowing people to sign transactions with their fingerprints instead of using long passphrases. And the keys controlling the assets will remain stored only on the user's phone. By adding a crypto wallet directly into the browser, this comment is from one of the product leads of Opera Crypto, they're calling it. We remove the need for complex extensions or separate apps. Opening up the PC browser to crypto marks Opera's second step towards making cryptocurrencies and Web 3.0 mainstream. Back in July, the current version of the app only supported ETH. Now this was on the Android version, the ERC20 tokens, and it only accepted ETH, ERC20 tokens, and ERC-Z21 collectibles, which it automatically presents to the user. However, the developers plan to add support for additional cryptos in the future. The decision to open up desktop browsers to a crypto wallet is part of the company's long-term strategy of focusing on more demanding users with built-in features. At Opera, we try to stay at the forefront of innovation. Our next aim is to make crypto integration mainstream. We believe blockchain technology has the power to transform the web of tomorrow and expect it to make a big difference in the years to come. So, how long do you think it'll be before all browsers, I mean, it's just, you know, you would think of using a browser that didn't have a crypto wallet. How far from this groundbreaking news from Opera? And how does Opera make money? Do you ever wonder that? You know, there's an awful lot of open source software out there. I mean, even Wikipedia. Wikipedia, they, you know, it's staffed by volunteers. You can become a Wikipedia editor if you want. All you have to do is click somewhere on a Wikipedia page, and a couple more clicks, and you're presented with a page that says, okay, tell us your name and your email address and all that kind of stuff, and they'll give you a shot. Who are these people, and where do they find all this extra time to do this stuff? Now, that's two separate issues, Wikipedia and how Opera makes money. I'm just going to ask my friend the internet. Now I am. How does the Opera browser make money? Well, it appears I'm not the first person to ask this question. How does the Opera software browser make money? Co-branded browsers for device manufacturers and operators. Okay. Search and partnerships. Remember the Firefox deal with Google as the search homepage? Yeah, okay. Number 3, with users' behavioral data. It may be one of the largest DMP data management platforms. They can do good in mobile and desktop advertising. Number 4, other data mining reports / trends to their publishers / partners / advertisers. And number 5, and finally, maybe not. That's what it says, finally, but maybe not. Their concept of one web is beautiful. They can now implement cross-device advertising, which is very niche and the future of digital advertising. No wonder why Google came up with Google Chrome. Okay. They lost me. All I wanted to know was how they make money, and I've got 5 different ways, and I'm still not confident. But hey, obviously they're doing okay. They've been around quite a while, and they are innovating. They're doing something. They're obviously doing something right, or they would not still be around. That's how I see it. Okay, and winding down this bit of the news, last May, the U.S. Commodity Futures Trading Commission, CFTC, regulated digital currency clearinghouse and option exchange LedgerX, announcing the company had plans to launch a savings program for BTC. The firm has been trading a lot of BTC derivatives over the past few months, and Paul Chow, the CEO at LedgerX, announced the official soft launch of LedgerX Savings. The soft launch was August 3rd. It's the first major service launch since the company started the digital currency options business. The first transaction was completed a few weeks ago and yielded the client a 15% annual return on their Bitcoin for the next 6 months, even if Bitcoin depreciates or stays at current levels. This is a powerful use case in market conditions where Bitcoin is not appreciating. How are they going to do this? Because BTC prices are volatile. The rate for a 2x strike call option for Ledger Savings is 16% annualized. Investors can opt for 3 months, 6 months, and 12-month maturities with interest paid out in US dollars. According to LedgerX, the company holds the digital assets and a US bank holds the gained US dollars. Ledger Savings takes one of the most popular trades on the LedgerX platform, called overwriting, and puts it in terms that are more intuitive to investors who are not as familiar with the minutia of options theory. We should have Bert come on and explain that. A lot of people hold their digital currencies for a while, and a savings account allows people to earn interest on the idle crypto. Ledger Savings is the only CFTC regulated interest-bearing account that works with virtual currencies, but there are a few global trading platforms that offer savings programs. The trading platform Magna, which I'm not familiar with, not only offers digital currency trading, but also a savings program that earns interest. Magna Savings provides regular interest for deposited funds held with the company as well. In addition to the BTC savings option, the LedgerX CEO details that the firm will also be supporting Ethereum in the future. Well, there we go. A bit of news for you. Let's take a look at the numbers around the world and see what's happening. Now, we had a great webinar yesterday afternoon. If you were not able to make it, we will have one again at 4 o'clock today. If you have any questions regarding yesterday's webinar, it was for the people who actually participated in the beta test. The one today is for anyone that did not participate in the beta for whatever reason, but you have an interest and you want to know how things turned out and what went down and what were we up to and all that. All that jazz. 4 p.m. Eastern today, right here and I will put the link in the chat box momentarily. Let's look at these numbers. These are cash markets. Currently, in the U.S., the Dow is down 53 points, NASDAQ is down 2, S&P 500 is down 1.5, and the Russell 2000 is down 4. No movers, no shakers, all red, but pretty quiet. In the commodity basket, today we got the inventory numbers on crude, and crude oil is currently down $2.68, trading 66.49 last. That's almost 4%. Gold down 90 cents, trading 12.1760 last. In the European markets, the FTSE gained 58 points by the close. The DAX, on the other hand, lost 14 points, and the CAC lost 19. In the Asian markets, Nikkei down 18, Shanghai down 34, and the Hang Seng up 110. Now the mover and shaker there would actually be the Shanghai. It's down 34 points, but for the Shanghai, that's 1.25%. And for Europe, no movers, no shakers. Well, the FTSE, yeah, no, it's quiet. It's really quiet. What the question is what's everybody waiting on? Everybody's waiting on something, so it seems. We'll find out. I'll be back shortly, and we'll talk with John and take a look at the Concierge Trade Alerts from last night in this incredibly quiet market. I mean, look at this. Michael will be here in a second, or he's already here, and he'll give us a recap of everything that happened in the live training room today.
Yes, it is a tight range today.
It is.
Crude oils are mover and shaker, though.
Yeah, boy, that thing's 4% almost.
Yeah.
So the low of the session's 28.52, and okay, this is where the session started, right there. So I don't know, 28.61 down to 53.
Yeah, on a 4-tick range, I can still see the high of the day and the low of the day. You know, it's a tight range.
Yeah, you know that's an 8-point range on the day. 8 points, 8-point range. Wow. That's something. All right. So let me put the. You're ready to go, right?
I am ready to go.
Okay. Let me get the.
I believe I have something going on with my computer that I will have to do a full virus scan. After I'm done.
Okay, I finally got it to pop up. There we go.
Okay, I have the charts now, just so you know.
Yeah, no, I was getting the chart moved over to the other monitor so that everybody can see it.
So everybody can see. Good.
Yep. Okie doke. All right, I'll hit mute and let you take care of business.
Okay. Thank you. All right, here we go. Good afternoon, everyone. Today is Wednesday, the 8th day of August 2018. Today, first of all, if you have not taken a free trial with us, go to the homepage here at CFRN.net. Right over here. See what I mean? My mouse just stopped working. There it goes. Now it's working again. And it looks like somebody just took a screenshot. Today, if you have not taken a free trial with us, go to the homepage here. It says 5-day free trial. Where it says apply.cfrn.net. Just click on that. Okay. You can see, it looks like somebody did it again. You can choose to do that, or you can go here to free 5-day trial, or use our proprietary indicators for free. Either one will eventually get you to this page. And on this page, all we ask for is your email, your first name, and how you found us. And you hit that submit button. Once you hit the submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know you took the free trial. Now, results. Today is the 8th day of August 2018. This morning, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today we made 14 ticks in crude, 15 ticks in gold. That's $290 a contract. And it took 26 minutes and one trade to get to the goal for the day. At that point, we're up $100 a contract. We took a total of 7 opportunities this morning. On the month now, we're at 776 and a quarter. That's over 5 days, averaging 155 per day. On the year, $21,875. That's over 143 days, averaging 152 per day. That is one contract, 2 hours per day. Both of those. One contract, 2 hours per day. Okay. See, my mouse just froze up again. And it looks like another screenshot. So I need to get this done and unplug from the internet. All right. In gold, this is where we got our goal for the day, right here. First trade, we took a short right here, got 10 ticks. The next one here, we got 3 ticks. Then we had a break even, and then we got 2 ticks. And it's done nothing since then. I mean, this is sad when you can see the whole day right here in about 30 bars. And for some reason, gold has been like that recently. And this is the euro. We missed a long opportunity there. We had a break even on this one. And during the break, there was a shorting opportunity right here and right here. So 2 quick shorts during the break. Yep, just locked up again. Okay, and crude oil is where we did the majority of our stuff today. Actually, yeah, no, crude isn't. Gold was. We took those trades in gold. In crude, we had a short right here. We took 10 ticks on. We missed a short here. That would have been a nice one. We did have crude inventories come out right through this area, right in here. Crude inventories came out. And right here, we picked up another 4 ticks on crude. Okay. Since then, crude just tanked. There were a bunch of opportunities here during the break. Okay. A bunch of opportunities. On the ES, however, it was just garbage this morning. There was all this right here. Nothing you can do with. And then right here was a long right at the end of the session that I pointed out. Stop would have gone to break even. You would have had at least a break even, if not taken some profit on that. Since then, there was a down close right here that should go right down into the zone again. Okay, and that was it for the ES during the break. Okay, back to these numbers. Today, as I said, is the 8th day of August 2018. We made 14 ticks on crude, 15 ticks on gold, plus 290 on the morning. Took 26 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 7 trades. On the month now, we're at 776 and a quarter. That's over 5 days, averaging 155 per day. On the year, we're at 21,875. That's over 143 days, averaging 152 per day. Okay, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Let's see what else we have here. If you have not taken the free trial with us, go to the home page at CFRN.net. And over here on the right-hand side, it says 5-day free trial. Click on apply.cfrn.net. Scroll down to where it says free 5-day trial, no credit card required, or use our proprietary indicators free. You can click there as well. And when you do that, you will eventually be brought to this page right here, where all we ask for is your email, your first name, and how you found us. Click on the submit button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. And that's it. With that, we can pass it back out to fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park. And Dwayne John is in the room. Okay. And
Okay, that's great.
you want me to open up his mic? I
Sure.
gotta disconnect from the internet. I got something nasty going on here.
What are you talking about? Somebody's taking screenshots. What's going on?
That's what it looks like. My mouse freezes and my screen blinks, goes black, comes back. It's like somebody's taking a screenshot.
Okay.
And then my mouse goes back.
Do you have something actively monitoring your internet connection?
I do. I have 2 things actually monitoring.
But I mean, not
So-
just for like scans and stuff. I mean, actively monitoring incoming and outbound traffic.
What the? Yeah, I do.
All right.
I do.
Well, yeah, nice. Virus scan. That's all you can do.
Yep. All right.
Okay. What was the recap of the recap?
The recap of the recap. Today it took 26 minutes and one trade to get to $100 a contract. 26 minutes and one trade. $100 per contract. It was a gold trade that we nailed in 26 minutes. The trade itself actually took like 10 minutes.
Okay. Well, fantastic. Fantastic. There's gold right there. We'll talk about that later. I put a chart out last night and we talked about it a little bit. Okay. All right. Thanks, Michael. John,
All right.
Welcome to the show. Oh, Johnson.
Oh, hang on. Let me open him up. Hang on. I didn't open his mic up yet. Hang on a second. Wait. Here we go. There you go. John, your mic is open now. John.
Yeah, he still might not be there. All right. Let me let him know that he's there. Just jingle his phone as he jingles mine. I should do the trick. Okie doke. Oh yeah, I better do this before I forget. The link, guys, to the webinar this afternoon, if you weren't able to attend yesterday, I'm going to put that in the chat box for you right now. Okay. Okay. What does B2858 represent? The Concierge Trade Alert that went out Monday night. Oh, hang on a second. Let me send this. Yeah.
Oops. Sorry. Randy, I'll get in touch with you this afternoon after I figure out what the heck is going on with my computer, okay?
I'm sorry. What's going on?
No, Randy said it was blinking this morning too. Meaning my computer.
I didn't actually see the. I didn't see the blink when that happened. So, okay, yeah. Good luck getting that figured out.
Yeah, I'll figure it out. I'm just gonna disconnect from the internet and see if it still does it. If it still does it, then it's something that's on my computer and that I can find probably. All right, I'm gonna go.
All right.
John's mic is open. Dwayne,
Okay.
So
well, he'll whatever. He's probably he's on the phone or something, I guess.
okay.
Okay.
All right.
So I jingled his phone.
Okay.
Thanks very much.
Not a problem.
Okay. So Daniel, in response to your question, let me just show you, and that'll make it pretty simple. As simple as these things get. I'm going to grab a new window. And now, pull up the file. Stand by, still checking. Okay. And here we are. Almost. Now I can just use that the rest of the week. On Monday night, Daniel, in answer to your question, this alert was emailed out to the Concierge Trade Alert clients to consider being long 2858 on the S&P 500 Emini Futures. In fact, while it's up there, guys, go ahead and just, everybody wants a screenshot from from last night for what we'll talk about today. You can grab it right now. The little thing on the top of the Go-To app that looks like a camera, it is. Click it, it'll take a screenshot for you, and I think it by default it just saves it right to your desktop. Okay. Okay. Alright. So everybody's got that. So that's what that was in answer to your question. Consider being long 28.58. Important prices, important areas are almost always tested. This we know. So not too terribly surprising that this it hit more than once. 28.58. I'm right on the number. 20.58. Okay, there we go. Alright. So the swing high, when I measured it yesterday, if that hasn't changed, it's supposed to, 28.63.75. So that is also the high of the week, high of the session. We came back to put in a lower high. Now this right here, we hit 28.61.50. 28. No. Yeah, there. 28.61.50. Okay, 28.61.50. So that's 3.5 points. Here's what that would amount to. However, we're into a new day, and in this new day, we have new trade alerts. So whenever you see B, that just represents CTA, Concierge Trade Alert. See over here, Daniel? Consider being long, buy, and then when you see an S, as you will. There you go. You have any other question on that, Daniel? Anything else I can help you with? Answer for you? Does that bring you up to speed? Now, if you've heard me say it once, you've heard me say it too many times. As long as the market is flowing, opportunity abounds. This, well, the creek kind of dried up. We don't care if it's rallying. It's the futures market, okay? If it's rallying, if it's crashing, whatever the case might be, as long as there is movement, something that we can attach ourselves to and just go along for the ride long enough to reach our goal for the day. You know, whatever your goal is, okay? Now, in our rules-based trading room every morning, in the live training room, we work with a daily goal, and this is what we teach in our mentoring program, and this is what the 2420 blueprint is all about. Learning to make $100 per contract per day. Is there always $100 available? Yeah, there's always at least $100 out there. Even in slow, creepy, dried up markets, you can usually find 10 ticks in crude or gold or a couple points in the S&P. Many people try to solve the market equation by going for more points. That's certainly one way, but that's the difficult way. That's the hard way. That's the break a sweat kind of way. A simpler way. Trading's not easy, but it can be simple. A simpler way is once you become consistent in your trading, you have consistent profitability. The choice to get more points isn't always readily available. If your goal today was to take 10 points out of the S&P, well, unfortunately, during this session, the range from top to bottom has only been 8 points. So, yeah, you could get a little going up, a little coming down, but why the extra work. Once you are consistent in your trading, and that consistent doesn't mean perfect, because there is no perfect. There is no 100% in trading. It doesn't exist. It can't exist for any number of reasons, physical, metaphysical. It's not possible. No indicator, no oscillator, no guru, nothing, not nobody, not no way, not no how can tell you what is going to happen next. I mean, the truth of the matter is, we're in a business where we have no idea what's going to happen next. And only the people that realize they don't know what's going to happen next, only those people, not the people who are on the hunt, chasing the indicators, looking for that holy grail. Okay? The only people, now this is a mind bender. The only people who have any hope of success in the financial markets as a trader, whether you're day trading, swing trading, whatever kind of trading you're doing, only the people who understand and accept that they do not know what is going to happen next. Those people will survive, even though they've already been given the bad news. The parade's already been rained on. They've accepted it. Now, with that illumination, you can actually go to work and find the high probability, low risk setups to the best of your ability, never forgetting that you don't know what's going to happen next. Back on, what day was that? Monday. Well, this is the mighty fall of crude today, 4%. Well, let's just see, what did we have for crude last night? Consider selling 68.45. 68.45. Now these are last week's weekly trading zones. And tomorrow's Thursday, typically the day that I replace. Partners, of course, get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. Actually, I think I actually ran a little late this Monday, and they have for years. But on Thursday, I break them out for the entire CFRN community, and I encourage you to write them down because they will benefit you next week, just like the weekly trading zones from last week, which you see on the screen here. Back yesterday, what did price do? It ran right up to the zone here. And hey, John, welcome to the show.
Hi there, thanks.
And it came right to the zone here, bounced, consolidated, and then we triggered last night at this number 68.45, and we've put in a low. Well, I'll tell you what's important. All right, at 68.45, which was the entry, at 67.45, at 67.45, that's $1,000 per contract traded. And then when you get to 66.45, right there, it's $2,000 per contract traded. So, John, how are you today? Welcome to the show. Glad you're with us.
Thanks.
What's happening out in your world?
Well, as you are showing, the crude broke down big time. We sold it actually a couple of days ago near the highs, and and a bit more yesterday. So we're on the right side of it. I was thinking about this last night. They are opening up the strategic petroleum reserves for about 30 million barrels or more. And, one way of hurting the Iranians, even though some people are still buying their oil, could be to drop the price down. And I think that might be behind this sell-off, actually. Um, so and you know, seasonally, when you get into August, you know, the sort of summer driving season is kind of winding down, coming to an end, so demand might be dropping off as well. And generally, you know, when we go into the fall, it's not a good time for oil. It might be different this year, but because there's no doubt that there's a there's a squeeze coming in oil, you know, maybe in 2019 and 2020 and 21, and possibly even 22. So this might be the last dip before a big rally in the oil. And remember, you know, the Russians and maybe not the Saudis, because it looks like they're maxed out, but the Russians might be able to increase output as well to, you know, to cover the Iran losses. And you know, remember, I mean, if people are not buying from Iran, they've got to get the oil from somewhere. Right. So that could keep the price kind of, you know, but it looks like we're in the 60s for the time being now on the oil price.
Yeah, I mean, this what are we're down 4% on the day, right?
Yeah, we're down to it really, yeah. And what did the crude come in at this morning?
You know, I wasn't in the room when the numbers came out, but go ahead and talk, and I'll check for you and see what they were.
Okay. The markets are a little bit softer today, but they're sort of trying to get some traction here, turn around. The Nasdaq's back positive after being off earlier on. We sold them near the highs last night, and they took a while to break, but they finally broke. The Tesla came down to you know, more or less where it took off from yesterday after the halt in trading, ran up, and then hang on a second.
Okay, the number came in. The forecast was a draw of 2.8, and we only got a draw. Well, it's a negative number, 1.351.
Yeah, I think they were looking for a bigger number. So, you know, the fact that it was such a small draw probably added to the sell-off as well. It did.
It was a positive number, a build of 3.8.
Yeah.
So last week there was a build of 3.8. This week they were looking for a draw of 2.8, and they only got a draw of 1.351.
Yeah. So that's you know, that's the reason for the sell-off, I guess, just because it had the momentum already. Oh.
You need to get that? In response to your question there, Daniel, about the good for one day, yeah, from the time they hit your inbox, I try to get them out by 9 Eastern each day. Don't always succeed, but that's what I shoot for 9 p.m. Eastern, and sometimes it's before that, and sometimes a little after. But until the next set of alerts show up, those are valid, and important prices and important areas are almost always tested. And example of that was what we just saw in the S&P. This number from yesterday, 2858. You know, we tried to rally and we came back to it, and we tried to rally and came back to it, and tried to rally and came back to it again and again and again. So what I was saying about extracting a couple points, I mean, there's from 58 to 60. There's 1, 2, 3, I guess 4 opportunities across there, just working off of that. Now, is it possible that it could be the same number 2 days in a row? Absolutely, it can happen, especially in flat markets like this, because you know, when nothing changes, nothing changes. So let me find my browser window. Yeah, I can see now why that probably won't What in the world is that? Oh, that's... Gotta try out that new Firefox. There they are. Okay. Benjamin, you had asked a question yesterday, and I answered you. Actually, I was looking for you. I think you might have. It showed you were still logged in, but I think you had left, or maybe you're on the phone or something. You had a question, I think, yesterday about crude and gold, which we did go over. So, if you still have that question, put it into the chat box. Are the alerts on for the trial too? There's two separate trials. You can take a trial of the live trading room, or you can take a trial of the Concierge Trade Alerts, and that either way, you have access to. If you take the trial, I'll work with you. I'll send you a video, and we'll do a mentoring session so that I can help you get up to speed with exactly what it is we're looking at and exactly what it is we're doing. Oh, you heard the answer yesterday. Okay, good. All right, I wasn't sure if you were there or not. All right, good. Now, last night, okay, when the alerts came out on the S&P, he said to consider being long 2862. That was last night's number. 2862. And where are you? 62. Okay, there's 62, and the swing high there was 61 and a quarter, and swing high there was 61 and a half. So the long side.
Hi, sorry about that.
Yeah. Well,
thanks. Yeah, no, the market's actually turning down again right now, and it's kind of looking, like just felt to me the last couple of days have been a bit over the top on the market, and we might be in for a bit of a pullback here, especially if we if some of these, like Twitter and Facebook. Twitter's acting very bad today. Facebook not much better from yesterday's sell-off. Amazon is the only, Amazon and Google are the ones that are kind of holding it up. But I think the market's potentially vulnerable to a sell-off going into the end of the week. And look, if the PPI comes out tomorrow and it's a shocker, which I think it could be, that might actually hurt the market. And Friday, we got the PPI tomorrow, CPI on Friday. If those numbers are worse than expected, it could actually cause a sell-off in the market.
Well, we have any other high-impact news coming out this week? I just closed the news window.
I didn't look at it that closely, to be honest with you.
I'll look at it again.
Yeah.
What else is going on out there?
Well, the grains are the grains are edging.
Congressman, how big a deal is this?
Well, I was just about to listen to it, but I didn't get time to it yet. But it looks like they sold stock because they knew there was going to be a bad announcement or something. I think they sold before the stock crashed or something. So that's kind of a. Just a sec. Sorry.
Yeah, go ahead. Okay, so let me scroll up to Thursdays. For those of you that don't know where to go for news, here's where I go. Investing.com. I like their layout. I like their format. In fact, we even have this calendar on one of our websites. And up at the top, you can just say today. That's what it defaults to. So you can look at tomorrow, or you can look at this week. Now, I'm going to this week because I want to see what's going to happen tomorrow and Friday. As far as news, we don't trade news. In fact, we do the opposite. We avoid news. We go flat. All right, here's Thursday. And we're looking for the, there we go. There's the first one. 8:30 a.m. tomorrow morning. PPI. That's a high impact event, which means the markets could react.
Yeah, the jobless claims could be
coming out. Well, jobless. They've got that.
That's the lowest. That's the lowest in about 50 years at 214. And remember, actually, that's an interesting point. You know, when you say that's the lowest in 50 years, it's actually probably an all-time low, because 50 years ago there was, you know, practically half the population we have today, or, you know, 2/3 of it. So the 214,000 relative to the population we have today is probably the equivalent of like 150,000 job claims. You know what I mean?
250,000?
No, 150,000.
Okay.
You know, in other words, that number is probably an all-time low. It's the same with the UK unemployment. UK unemployment right now is the same as it was in 1974, but the population is.
Boy, Great Britain's got all kinds of stuff happening Friday morning.
Yeah, yeah.
Coming out.
Yeah, just 1 sec. I'll have to go and check this. Sorry,
it's go ahead. Yeah, so the Friday morning. I'm sure we're on Friday. Yeah, Friday. Here we go. Oh, I was pointing to this. Hopefully you saw it. Japanese markets. Well, Japan. They're going to get their GDP number tomorrow night. 7:50 p.m. Eastern. So if you're trading the Asian session and all of a sudden the market starts moving, and it doesn't tend to move a whole lot in the Asian session, then you want to know why. See, if it's a major, because we're trading in global markets today. The S&P, the Dow, these are not U.S. based entities. Well, they are U.S. based entities, but they're dealing with global markets, and so it's important to know if there's a high impact report coming out somewhere else, because it will affect you where you are, and it will, most importantly, it can affect your trade. So the GDP coming out of Japan, and then the next major news announcement would be Great Britain's GDP. They've got quarter over quarter, month over month, and year over year. And then Great Britain has their manufacturing production, that's high impact. And as we roll into the open tomorrow, we've got core CPI. Canada, they've got employment change. That's probably it for, oh, that was Friday. I'm sorry. When did we cross into Friday? Oh, right there. Friday, big day for Great Britain. Here in the U.S., all we've got is that core CPI coming out Friday. That's Friday morning. And tomorrow, we've got the PPI. Okay, all right. I'm glad we got that squared away. Okay, let's see, Ben, you had a question. Yeah, that's fine. Yeah, get a hold of me whenever you, whatever you would like. Support at CFRN.net. Okay, back to, so we never triggered here. Okay. Now, also on last night's alert, it said, if the opportunity presents itself, consider being short the S&P 500 at 2852. Important price important area. So we can see what the market needs to do. It needs to wake up and get moving. And it will. Why it's in a state of slumber today, I'm not quite sure. 2052. And of course tonight, as the numbers come out, it will
yeah, you know, this S&P might, this little pullback here might just be that, you know.
We've been in an 8-point range since the open.
Yeah, you know, if we break out above this thing could still go for a run. You know what this reminds me of, doing this run up in the S&P? Remember, I think it was a year ago. Remember I said that the S&P was going to go up 100 points from probably 25, 40 or wherever it was, or, you know, back then. And it not just went up 100 points, it went up even more. Feels like deja vu, you know, the way this if you go back and see how much we've gone up in the last few weeks, it's, you know, certainly 50 points plus already.
This gold,
the gold is acting all right. You know, it's going to be interesting. As a matter of fact, the gold stocks are just turning here. We might be seeing the top right here, in the top in the dust, and the bottom in the golds.
Oh, this is good. Check this out. And last night I had put out on the blog. I was observing the market, and I just put some thoughts out. Wasn't officially putting out anything because the beta's ended, but this price channel, this was a 30-minute chart on crude last night at the time I put that out, and we had started to walk this price channel up, and then this was the first we peeked out of it. Man, if I could get my mouse to cooperate here, that would make things. Okay, so I'm gonna bring this down, but we had a spike to 62% retracement, and price was doing a very good job of recovering. Leg and a retracement and a leg and a retrace and a leg, and then it popped out of the channel. Well, after it popped out of the, now this is just a still photo image. Now once it popped out, it popped back in, and so I put some commentary on that. I said, if it can't, I said once it comes out of the channel and it remains out of the channel, then you know the jig is up, whatever that means. Now we sold off. I would have expected, and this is what I was writing about in particular, was that I would have expected the market to attempt to rally more than it did when gold. I mean, you see the sell-off in gold here, right? I mean, and the S&P just did not react to it. That's unusual. Do you agree?
Yeah, kind of. It is starting to, you know, what I'm seeing today is, I noticed the behavior is a bit different. Like the gold was up overnight, right? Came down, and now it's starting to go higher again. It feels like it's sort of starting to claw its way higher. You know, it feels like it might be through going down, and it's actually starting to pop a little bit right here as we speak.
Yes, right there.
I kind of like the look of it, the way it's acting, and you know, I think if we get up above 1230. And that will be a very big deal for us. And actually the silver is leading the way today, which is also another good sign. And maybe the palladium, you know, has finally put in a low here at 888. But the palladium needs to really get back up towards 930, you know, so to really look powerful. And of course the copper, you know, the copper is really the head scratcher. You know, the other thing is that China The China, you know, we were up yesterday, we're down again today. Honestly, this Chinese situation on the stocks is very troubling. It's almost like, you know, if you look at the long-term chart on the Chinese market, somebody was twittering it around last night. It's at the edge of a trend line that if it breaks, I mean, there could be a devastating move down in the Chinese stock market, really bad. And that could drag the whole, you know, the whole world economy, you know, the whole world markets down with it. That could be the
So what do you think will trigger it?
well, you know, the tariff thing, you know, the more I think of it, the more I really think this Chinese, this trade thing could have been handled a lot better. I mean, I don't understand why Trump didn't. I mean, Jesus, you know, if you've got a trade deficit of 500 billion, and somebody, you know, makes a gesture off, you know, say, look, we can bring it down by 70 billion overnight. We'll buy $70 billion worth of stuff from you, including soybeans, which probably would have avoided this crash in beans. You know, what's not to like? They could have said, you know, we'll graciously accept the deal. However, we'd like to work on a plain deal, you know, 150, 200 billion to supply the Chinese market for the next, you know, 10 years or something. That, you know, all of a sudden you've cut your deficit in half. You got a huge win instead of this crazy situation we've got now, where you know, they're trying to play chicken. You know, who's going to blink first, and it's just not a good game to get into with the Chinese. I mean, the whole thing is, you know, he had everything going well for Korea with the UN and the Korean currency getting smashed and the sanctions working because the Russians were cooperating, the Chinese were cooperating, but now that cooperation has deteriorated a lot. And whereas I think Trump should have, you know, played it pretty carefully to keep that, you know, to keep the pressure on, and not you know, upset people who are, you know, who are going to say, well, if you're going to play that game, we're not going to help you so much with Korea, you know. So I think could have been done better, and I think there was a more tactful way of going about righting this wrong. I know I know China's under attack for all kinds of things, and they're probably most of them are justifiable, but I think the way you deal with them is perhaps more, you know, speak more softly than carry a big stick, you know.
Yeah. Well, I mean, what's the end game? What is it that
well, the end game is to get the tariffs down altogether, and also, you know, open up the markets and stop all this, you know, theft of intellectual property and everything else. Yeah. You know, so, but look, it's probably going to get resolved amicably in the end. But it's just, you know, it's putting China. Look, maybe no matter what, it was coming China's way anyway, because it's just the economy has been relentless to the upside, and it is. I mean, look, the Chinese economy, you could argue, kind of peaked in 2007, 2008 with the Beijing Olympics, when they were growing at 14%. Now they're only growing, well, supposedly they were growing at 7%. Now it's more like 5%, and some people are saying it's 2%. So, you know, 2% growth to China is almost like a recession in of itself. And then you've got, you know, there is a sort of house of cards thing. You've got this property. You remember it. I mean, they're just as vulnerable to go through what we went through in 2007 to 9. The property market, you know, it could happen in China. It could be a tremendous collapse of property because they've saturated the market, and it could really come undone. and you know, that's a contraction, a wealth contraction of significant proportions. And then on top of that, their you know, their cost, you know, 18% of the GDP is being you know, is in debt service. Now, you know, the U.S. is in the same boat to a certain extent. You know, now we got to pay $500 billion a year just to service the debt. I mean, $500 billion goes just out the window. Every $500 billion we make is gone up in smoke servicing debt.
Yeah, we need a reset. We need a reboot. Turning the world's economy around. Well, I mean, we talk about turning it around, but the solutions, oftentimes, as with the tariff, you know, the solution brings with it its own set of problems. So,
well, look, we're in better shape today than we've ever been before. There's no getting away from that. We're in fantastic shape, and so is the rest of the world. You know, life's getting better for everybody, but you know, how much longer we can. I mean, the jolts came out yesterday, and it wasn't quite an all-time record, about 6.74, but it was about 6.62 million, I think, jobs open. Still more jobs available in the official unemployed. So, you know, as good as it gets. And actually, the trend looks kind of like it could keep going if we maintain a 4.1% economy or better. You know, this juggernaut could keep going for a while longer, and so the jobs creation juggernaut could potentially. I mean, look, there's Goldman Sachs and people saying that we could be down to 3.2%, 3.4%, you know, in 2019, and you know, a lot of countries around the world have got very low unemployment. It's pretty amazing. You know, even Mexico.
In Mexico, what's the employment situation?
3.2% right now.
That's incredible.
And in some places like Malta and some of these small islands and some of these tax havens, it's down to 1%. You know, there's a few places less than.
Malta's the new crypto capital of the world.
Yeah, there you go. There you go. It's less than 1% unemployment in Malta, I think, something like that.
Less than 1%.
And Gibraltar's another place that's very low. Cayman Islands, I think, is Panama. All these kind of hotspots.
You started to talk about this congressman before you left.
Yeah, it looks like I haven't got the full scoop on it yet, but it looks like because I just got a thing up on my screen, and it said they avoided $750,000 in total losses, which were held by members of the family. But you know, so they probably.
So it wasn't about making. It wasn't. Well, I guess it's still a profit, but they were avoiding a loss.
It looks like they were selling before the bad news came out. Maybe the stock ran up and then it didn't deliver or something. That tends to be a bit of a, you know, that tends to be well, you know, Martha Stewart went to jail for doing the same thing, remember?
Now, why do you think it is? Why did they hold Martha Stewart out? I mean, something that, well, for congressmen for so long, it's just another day at the office. I mean, they actually had to pass a law on themselves to stop them from sticking their hand in the cookie jar, from trading inside information.
Well, supposedly there, you know, there was, when that came out, there was a sort of a, excuse me, there was some kind of a indemnity, or you know, that where congressmen can actually make money from insider information, and I don't know whether they changed that. Maybe they did.
Yeah, I mean, there was some legislation in the recent years where, let me see, Congress. Let me do it Do it the simple way. Congress no longer allowed to trade on insider information. How Congress quietly overhauled its insider trading law. Okay, this goes back as to 2013, April 16th, 2013. The legislative process on Capitol Hill is often slow and grinding. A year ago, President Obama signed the Stop Trading on Congressional Knowledge Act into law. That's what it's called. The Stop Trading on Congressional Knowledge Act. I want to thank all the members of Congress who came together and worked to get this done. What does it do? The law wouldn't just outlaw trading on non-public information by members of Congress, the executive branch, and their staffs. It would greatly expand financial disclosures and make all of the data searchable, so insider trading and conflicts of interest would be easier to detect. But on Monday, when the president signed a bill reversing big pieces of the law, the emailed announcement was one sentence long. There was no fanfare last week when the Senate, now remember this is going back to 2013, there was no fanfare when the Senate and then the House passed the bill in largely empty chambers using a fast-track procedure known as unanimous consent. So everybody said, okay, they've caught us, this time up to our elbow in the cookie jar, so let's just pass this in the middle of the night when everybody's asleep, and then maybe no one will notice, and maybe nobody will call us out on what we've been doing for all these years. How we've created so much family wealth all these years. Grow up to be a congressman. I mean, there's whatever. To understand how the law changed, this is where I asked Holman to meet me in the basement of the Cannon House Office building. This is where public records are kept for those who can handle traveling to Washington, D.C. Okay. If you want to look up the financial disclosures form filed by high-level congressional staffers, say, to find out whether they've been using the privileges of their position to make well-timed stock trades, you go to this office that he was standing in that day with this guy when he wrote this article. If he or she has filed a financial disclosure form, it will come up as a PDF, which you can print at a cost of 10 cents a page. The database itself is almost meaningless, says Holman. He says the only option for those who want to get a comprehensive look at what 2,900 staffers have filed is to review the case one by one. And it's just too big a job for anybody to do. The Stock Act was supposed to make the task significantly easier. Records from members of Congress, the executive branch, and their staff were supposed to be posted online in a searchable, sortable format. Now, there were particular concerns about risk for those who either travel overseas on government business or work overseas. What has been eliminated now is the ability of people to go fishing, if you will. Well, insider trading is illegal even for members of Congress. I like the way they worded that. Still, two major elements of the law remain. Insider trading is illegal even for members of Congress in the executive branch. And for those who are covered by the now narrower law, disclosures of large stock trades are required within 45 days. So that's the story. Now, why do you think they singled out Martha Stewart?
Somehow she got caught. I forget the circumstances, but
Gary suggests that it was that Comey put Martha Stewart away to make a name for himself.
Yeah.
That's very possible, Gary. What she did, I mean, she didn't go to jail. This is how the story goes, at least the way I understand it, is that she didn't go to jail for trading on insider information. When questioned about it, she lied, and so that's supposedly what they locked her up for was not the insider trading, but the actual cover-up. Yeah, Michael P. just typed that in too. Like, Martha Stewart lied to the FBI. Well, I think probably that's not the first time they've been lied to, and I think that there was more to it. She aggravated somebody somewhere in a high place who had the authority or the ability to make her life miserable, and They did. That was just shocking to see that happen. It was like the world's in slow motion. And is this really happening? I mean, not that I'm a great Martha Stewart fan. I'm not. I don't have anything against her either. I know that she was very popular, and a lot of, you know, ladies and other people look to her for all sorts of interesting information on what to cook for Thanksgiving and how to decorate your living room. And then all of a sudden she's in jail. So anyway, I'm sure she was quite the celebrity there. I think she had a private suite or something. How that story goes. Okay, so last night we did catch that a little bit of that move down in gold. The markets did not rally the way that we had thought they would. As gold was climbing, I thought the stocks would fall, or the indices, the S&P, the Dow. They languished. That's languish right there. Now, okay, so this needs to come all the way back. So there's no confusion. There's that line right there separates. That is not midnight. That is when the Globex open happens on the next candle, right there, Wednesday. Okay, John. Let's see. What else do we want to talk about here? What else is in the news? Opera is coming out with a new browser. I mean, we were talking about Netscape Navigator, I think, yesterday. Opera's got a new browser coming out. Their browser already has a VPN, a virtual private network, built into it. It's got screen sharing built into it. It's got messaging built into it. And now they announced today that their latest release has a built-in cryptocurrency wallet, a digital wallet, built right into the browser, which the others will, I'm sure, beat feet to compete with.
The Bitcoin took a big hit yesterday.
Big hit. Yep.
I was actually kind of, you know, when it ran up, although it looked very good when we talked about it a while ago, it's kind of looking more like a dead cat bounce now because of what happened, and in fact it's getting worse. It looks like you know, it actually looks devastating. It looks like we're probably going to go down and test these lows, the 4,000, 5,000 area. After all, you know, I think this one was, you know, it's probably been, you know, it's definitely been better for day trading or for trading in on this last bounce. There's been a bit more action in it, but if you look at the larger picture, you know, the fact that we ran up and then we just negated it all in almost overnight. And if you look at the annual chart, it really looks, it doesn't look good, because even though we had this kind of amazing rally, it came out of nowhere, it's basically been negated, that whole rally, and that's a very bad sign in a bear market. So you know, we've really got to go down to where we were really around the 4,000 level, where, you know, we need something, we need a kind of a spike to sort of tell people this is it. You know, we got down to 4,000 and maybe it reverses back to 5. Then when that happens, maybe we've got a shot at turning this thing around. But it might be a much more drawn out affair. If you remember, we said Bitcoin might not bottom till February or March next year. And, you know, it could make a low, then it could rally up, and then it could come down and maybe make a double bottom. Then that double bottom might be the place to you know, to get back in and get serious about the cryptos.
Yeah.
But this is a really bad, I mean, it's kind of crazy because there's been quite a lot of good news, you know, coming out about Bitcoin recently, and just look at the way it's sold off from 7 down to 6, well, from 8 down to 6, really. It's pretty bad.
bring up a chart here. Got one more shot. Wow. I guess I've been blackballed.
And actually, it's a little bit of a warning sign for the markets, because, you know, we have there has been a little bit of a tendency for Bitcoin to precede the market, movements. The fact that we've had this dip could mean we're vulnerable to a sudden
vulnerable to what?
To a sudden knockdown in the markets.
Okay. All right. So the Dow made it down. We had a trade alert last night to consider being short the Dow. So the fact that we've actually managed to trigger here is maybe we're going to start to see some movement. It could be gas, I suppose. 25 to 25 550. Right, we're at 550 right now on the nose. Right on the nose, 25 550. So if we start to fall from here, let me just put this up to. Okay, now, if memory serves me right, that's a weekly trading zone or close to it. Yep. We've just come through the zone. I'm just going to go ahead. Today's Wednesday, but I usually move these on Thursday, but I'll just put it up there. 25560. 65. So there we go. So that's the story on the Dow. 25560/65. All right, so that's a weekly zone there, and so price has managed to close below it. And now we pull right back up to it. If this resistance holds, then we potentially are going to put in a more dramatic leg to the downside. If we break that trend line, that'll be a signal that, or a sign that we, at a false start. So for the moment, looking at this chart, we have to think about is the potential leg to the downside, and if there is a leg to the downside from 60.65, where's that going to take us? It's going to take us down to 25.485, which is 25.485. There we go. So that would be a day like today. If we got that, yeah, nobody wants to see the market go down, but as futures traders, it's not. We're going to be flat at the end of the day and start all over again at 6 p.m. Eastern. So if we pull up here and we find resistance, now you've got two things here. Now you've got the market created this little trend line that you can draw across the top, and we've got this weekly trading zone. So now price has to do two things. If we're going to rally, it's got to break that trend line. It's got to get above this weekly zone. Over here, we can see how we consolidated right at the zone, which is what we anticipate. And we rallied up, came back, we've gotten under. Now, the next zone overhead, above 65, the highest zone for the week is 25735. Okay. Now, we got there, we got to the upper range relatively quickly this week. We would not expect the market. We'll see. The news that there's news Thursday and Friday. So, what else did you want to cover, John?
A couple of things. Lumber, which we sold yesterday on this rally, has gone down, limit down. It's really looking bad now for lumber. We're down to 411. Just put a buy stop above at 412. If we limit down again for the first time almost in a year, I think. So it's looking bad, but the gold and silver are actually rallying quite nicely right now. The palladium just took off from that low we mentioned at 888. Actually got down to 886, but 888 looked like the pivot point. And the palladium's kind of clawing its way higher too. So the gold and silver are starting to look more constructive. I wouldn't say we're out of the woods completely yet, but there's always a chance of a spike down or even another breakdown. But this is quite an encouraging effort. The gold stocks are also turning, and the gold GOLD, which is bellwether leader, is actually doing quite well today. It's on a bit of an up. It's potentially today we might have seen the lows in these gold stocks, and we got a doji on, or you got a weekly doji on that gold right now. The dusts, which has been the problem all along, are breaking down from the highs of the day, and if that's about it, you know, the dust, when we're in a kind of a you know, pullback in the gold in the past, the dust has had trouble getting over 30. It seems to be the case today. So if the dust breaks down from here, it really paves the way for the metals to rally. And you just got to be ready for the possibility of some surprise number coming out with the CPI, PPI. And it's one of these weird things, you know, if it doesn't come out, the market might say it's not, you know, they're following the numbers or something, because everybody knows inflation is out there, especially with these tariffs. So, but if they come in 4 or 5% annualized, I think that it's going to be the gold's going to have a hard time restraining itself from moving higher. And possibly could be a very dramatic up move in the coming days if these numbers are an upside surprise. And I noticed today the Australian dollar's turned around very sharply. The dollar hasn't broken down yet, partly because the Canadian got hit on this business between Saudi Arabia and Canada. And the British pound.
What's the story up there on the medical care? They're withholding medical care from who? How's that?
Don't know. But the British pound is the other problem. You know, this whole Brexit thing. The pound is breaking down today. It's down to 129. The rest of the currencies, the euro and stuff, are turning, but these other factors are weighing on are keeping the dollar strong, if you like. But we might see, you know, the currencies, even the Canadians, rallying today. So it does look like we could be witnessing a turn here in the dollar, and it could just suddenly break down. I mean, you know, we've tested this up, you know, the low to mid 95 area a number of times, and it's kind of been rejected. We're just below 95 right now. If we suddenly lost the dollar in the US dollar, that could definitely push the gold price up from here. Oh, incidentally, you know, we were talking about the Venezuelan market yesterday going up 1,000,000% in 2 years. The gold has gone up 3,000,000% in this year in Venezuela. Price of gold. How
much?
I read it yesterday, 3,000,000%. I'm not sure if it's from this year, but it's over the last year or so. It's gone up supposedly 3,000,000%.
Wow. Okay,
So things are really bad in Venezuela. Yeah. Worse than Zimbabwe. You know, way worse.
And so, where's the international humanitarian aid? Is that on the way? Is the Calvary coming?
I'm sure there's some things going on because Trump eased the sanctions on Venezuela. They didn't want to kind of kill the country, kind of thing, you know. So I think they are kind of helping, and I think there's a bit of a dialogue going on between Maduro and Trump in spite of it all. So
this is fresh news, a couple hours old. Saudi Arabia is transferring all Saudi patients currently receiving medical treatment in Canada to different countries as the diplomatic row between Riyadh and Ottawa shows no sign of abating. Now, this is a common thing, correct, for people from Saudis, I guess they're called, to go to Canada for medical treatment?
Probably, possibly, yeah.
Yeah, I've heard of it. I think it's somewhat common for those who have the money. All Saudi medical treatment programs in Canada have been canceled, and arrangements are already underway to move patients out of the country. The move comes after Saudi Arabia took the stern step this week of expelling the Canadian ambassador and suspending all new trade and investment between the two countries, a retaliation for criticism of the arrests of Saudi civil rights activists. Any other attempts to interfere with our internal affairs from Canada means that we are allowed to interfere in Canada's internal affairs. Since then, Riyadh has also halted academic exchange programs, giving 15,000 Saudi students 1 month to transfer elsewhere. And Saudi, the state airline, has announced the suspension of all flights to Toronto. So what's at the bottom of this? They've been missing in our internal affairs.
I think it's Trudeau kind of being too Mr. Goody Two Shoes, and kind of like the holier than thou attitude of Canada, being lily white and all that, and sort of interfering in Saudi affairs, not going down very well. And same way as they kind of stabbed Trump in the back at this, after this summit in the summer.
New Saudi Crown Prince has ushered in a wave of social and economic reforms since his appointment last June. Critics note, however, that the royal decrees do not go as far as addressing the kingdom's strict laws on freedom of expression, assembly, or liberal use of capital punishment. While the U.S. is traditionally Canada's greatest foreign policy ally, Washington has made it clear it will not involve itself in this issue. Both sides need to diplomatically resolve this together. We can't do it for them. They need to do it. So for once, we're not the world police. Oh, Daniel
That's
just
funny.
said 2 Gaza missiles just hit a town in Israel. Let me see if I can pull that up. Missile strike. Okay. News. How long ago did this happen, Daniel? Something that just happened? I don't see it. All right, anything else you want to cover, John?
No, listen, thanks very much for the invite. And
Yeah, I just got, if you want to hang on for 1 second, I got a clip, or a link for that news. Let's see what's going on. Okay. 2 rockets launched from the Gaza Strip were confirmed to have landed in Sderot, S-D-E-R-O-T. I don't know if that's a typo or not. Wednesday evening, the Iron Dome was activated in response to the rocket launchings. Are you familiar with the Iron Dome? I'm not.
it's a missile defense system.
Okay. All right. Earlier in the day, the IDF raised the level of alert on the Gaza border after seeing Hamas evacuate its position along the frontier. 2 Hamas snipers opened fire at troops. I was trying to get some kind of an idea as to how bad this was. Well, anytime somebody's hurt, it's bad. I don't see any numbers. Okay, Daniel found another one. Okay, so it happened actually last night, Israeli time. Thanks, Daniel. Appreciate that. All right, John. Well,
Okay, listen, have a great
tomorrow.
afternoon.
Have a
And
good one.
yeah, we look forward to tomorrow. Thanks very much.
All right,
Bye-bye.
bye-bye. I got that second link, Daniel. A UN aid agency Wednesday called on Israel to allow emergency fuel into the Gaza Strip to avert the shutdown of hospitals and sanitation facilities as tensions escalated between the territory's Islamic militant Hamas rulers and Israel following an exchange of fire along the border. Sirens wailed in southern Israel, warning of incoming projectiles. I don't know if any of you have ever watched the TV show Homeland. There's something about that show. I wouldn't say I'm a great fan of it, although when I first started watching it, in the beginning, the guy from Billions, Acts of Acts Capital, he was the pivotal, had what I thought was the pivotal role in the show when the series started a few years back. And well, I better not. I don't want to spoil it for anybody that hasn't seen it yet. But for those who have watched the show, the way they bring to life these Middle Eastern countries, Claire Danes, the actress who plays, I've now learned, the key role, she goes into these cities, and I don't know, there's something about the way they film it. Maybe she's a great actress. I don't. Maybe they have great writers. But it seems so realistic, and some of the music that they play, it's a well-crafted show. And again, I'm not a big fan of the show. So then, how can I say? Watch it. You know, I'd love to hear your opinion. You know, it's not the type of show that I would normally seek out to watch. It's almost hypnotic once you start to watch it, as she assimilates herself into these various cultures. So, anyway. We're having another webinar today at 4 p.m., Michael. All right, so on the Russell, let me get this up to date. S&P 500. Okay, we've still not triggered on the Concierge Trade Alerts. The Dow did trigger. It made 30 points available, 29 points available to the downside. Okay, this is what we've been waiting for here to see which way this might go. And that's not much of an indication, but it's all we have. So price is up against this week's weekly trading zone. Okay. 560, 565, and because of the market's behavior, we were able to draw a trend line connecting these two tops. So now that becomes resistance, okay, breaking that trend line. So we've got the trend line, and then we've got the weekly zone. So for price to get back up over that, it's going to take some effort. Remember, for prices to fall, all that has to happen is buyers stop buying. That's it. Doesn't take any financial commitment. If buyers stop buying, prices will fall. Now, the other side of that story is that it takes financial commitment for the markets to rise or rally or move higher. Well, we had a hard time with the easy stuff, the tough stuff. No, there is no easy in trading, but it can be simple. So it's just a waiting game right now to see. This is not if you're waiting for a trade, I would say it's better to go wait somewhere else and then come back to a lively market, because on a day like this, it could literally take you, well, it could take a long time and seem like a huge Herculean effort to accomplish in a market that is active and vibrant and trending, what you might accomplish in 3 to 5 minutes on some days. So you can, well, okay, so let me phrase that differently. Let's see, how differently can we go? If every time you sit down and put a trade on, it only lasted 3 to 5 minutes. Maybe 5 to 10. We'll go 3 to 10. Every time you sit down to trade, you would not only have a setup relatively quick, but the setup itself would only last 3 to 10 minutes. Versus this grinding, grueling, dueling candlesticks that we have here. I guess what I'm trying to say is when you spot a market that's mired in quicksand like this, there's no power that you or I have that will move this market in either direction. As the old saying, you can't get blood out of a turnip. Well, it's difficult to get profits from a market that's not flowing. You know, yes, it did drop down enough to make 29 points available. This is the Dow. It only pays $5 a point. It's not quite $150 per contract available there. The Russell, so a little more movement. So if you want to have peace of mind, really, when you see a market that is this tied up in a knot, let it sort itself out. Because in an hour, you can have a week's worth of activity in an hour in the proper market. So you just have to wait for that market. Now, after the fact, of course, it's very easy to say, well, that was a quiet market, and that was a quiet market. Well, you can learn to say that, you know, live in real time. You just have to know what's important and where to look and what to measure. And, you know, some people look at volume. There's a number of different things, but if you just look at the chart, I mean, the patient is not well, okay? Just rolling sideways. That is not how this typically looks. It typically looks more, yeah, like that. Like that, you know? Then you get this. This is overnight. This is the Russell. Russell's not a big overnight type of futures contract to trade. The crude oil, last night's Concierge Trade Alert, LDV. The Russell gave up 7 points at $50 a point. $350 per contract available, and it looks like it wants to trigger on the long side here coming up. We're at 1691.5, and Concierge Trade Alert is to consider being long at 1692. The swing high so far is 1691.70. So look left, always look left. When you teach your children how to cross the street, you got to look both ways. But when you're trading, you only have to look left. So 1693 to 1695. Okay. Now, just because it's this slow, creepy kind of day, the trigger is 92. Concierge Trade Alert, consider being long, 1692. You notice this is 93. Because of this. I mean, it's wiggling back and forth, back and forth. You see, it looked like it was going to get busy to the downside, and what did it do? It rolled right back up. So if we trigger, I would not look to take a lot out of this. You know, a couple points. Yeah, we could. I'll change this to 1696, but I would just suggest that maybe at 95 you start looking for that exit. Now, I said all that to say this. You could do that, or you could go fishing. And honestly, today just might be a better day to go fishing. Now, you can set up some kind of alarm, some kind of alert on your phone and whatever kind of app you have on your phone, so that when the market moves you can define, you know, is it points, is it volume, is it percentage? Your platform is going to notify, whatever you decide, your platform is going to notify you when that happens. Okay? If I was, this is just a for instance, a Russell trader might have told their smartphone, alert me when price on the Russell gets to 1685. Also notify me when price reaches 1690. This way you have an opportunity, without having to be glued to the screen, glued to the platform. You've committed the office, perhaps, you've observed things, you've programmed in some alerts into your phone, and now you're going to go take care of whatever it needs to be taken care of when the phone goes off, because the market works when you don't. Yesterday we talked about not having any employees, and people who've had employees know, that can be a headache, and it can be a blessing too, but it can be a real headache. The market, whether you look at it as your boss or your coworker or your business partner, just don't look at it as the enemy. It's not out to get you. It's not. It seems that way sometimes, I realize, but it isn't. So relax. And when your phone alerts you, if you have access to a platform, then you can trade that opportunity. If you don't have access to the platform, then I dare say you won't trade it, and you'll take the next opportunity. But sitting, staring, grinding your teeth, wanting to see the market rally, I've never had any luck making a move. On crude, we said to consider selling 68.45. That was $1,000 per contract, $2,000 per contract. That's what the market made available. Does that mean that's what you took out of it? No. What you would be able to take out of this move, whoever you are, is where you've placed your stop loss. Now, a move like this is perfect for the indicators to use not as your method of entering the market, but effectively trailing your stop. So if you're short 68.45, okay, you'll notice that we're red and falling, red and falling. When you've got red and falling and red and falling, for some reason you might not want to be short. I don't know what that would be, but if you have a reason, okay, just make sure you don't go long, right? I'll say it again. Red and falling doesn't mean you have to go short, but it definitely means do not go long. Danger, Will Robinson. We have possibly the first exit signal in this entire $2,000 plus move. If you were trailing your stop behind the CFMA1, the step line has, bumped up against it a few times. It's crossed over, but this is the first candle. Now, once you, might be difficult for you to see the first time, but once you see it, then it'll always stand out to you. You see how this candle, it has got on the north side, on the north face of the CFMA1. Price is falling. If this candle closes, and that's the key, and we've only got 3 minutes left in the life of this candle. No, I'm sorry. We have 3. That's right. 3 minutes left. If this candle closes green, that is the exit signal. So you trailed all the way down, just staying right behind that CFMA1. Just moving it on down, moving it on down, moving it on down. You might have had some number in your mind, or maybe you have a target that you're trading to as part of an alert. Okay, one of the Logic 247 alerts. Even if you hit the target on the alert, okay, let's say, pick a number, it doesn't matter. If you hit the target right there, as price was falling, instead of a Concierge Trade Alert, we'll say this is one of the Logic 247 that has your target. So you sell 45, and when you get to this number, whatever it is, the target's 67.24. Okay, I mean, we're all excited when price gets to the target, and we want to get out, and then we can put our feet up and feel good about ourselves and life, and because we had a nice trade. Don't do that, okay? I know it's hard, but it's how long do you wait? How much time and effort do you put into getting into a profitable trade, right? I mean, you work hard, time, hours, all of that, and then because we want to feel good about ourselves or whatever, we have a tendency to, we see a little bit of green and we jump out. You worked hard to find this opportunity. Don't short circuit it. Now, when the alert was issued, if there had been an alert issued, 45, and then take profit, the target 67.20. It doesn't matter, it's just a number. If this is what it looks like when you hit 67.20, then you just flow with it. Okay, now these are 30-minute candles, so there's a lot of back and forth, but there's no danger. You've got a hard stop, and you're trailing that thing down. Okay, you're trailing that stop down. So when you hit your target, okay, maybe you tighten it up a little bit, because if we had gotten out at this arbitrary point I picked, if we'd have gotten out at 67.20, we would have missed out on the opportunity for, well, the exit right there. Okay, it printed. That's your exit. That green candle right there is the first exit. It's the only exit signal in this move. You only need one, I guess. So the close of this candle, 66.68. $50 ticks, or $500 per contract, is what it would have cost you to exit at the target versus the exit signal. Now, when you go through the beta test results from the beta test that we just completed, it was a 3-week beta test. It's complete now, and the records are there for you to look at. I talk about this a number of times, and sometimes I'll even write it into the alert. The alert will, give you the target, maybe 2 targets, sometimes 3. And then it'll say something like, if there is momentum, trail, as far as you can. That's it's an unsaid, unwritten guideline. Always trail if you can. I mean, there's no reason not to. If you really want to get out of the market, for whatever reason, then put yourself 2 ticks behind price, and you'll get out pretty quick. Well, why not just hit sell market? Well, you're gonna lose a tick or 2 either way. If you hit sell market, you're gonna get docked. If you put your stop 2 ticks behind price, you'll probably get clocked the same way. However, you've closed the back door and left the front door open. So let's say we were in a long trade. You move your stop up so that you're now 2 ticks behind price. If it backs up 2 ticks, you're out. But you've left the front door open for that long trade. I mean, all of a sudden, you know, intense buying comes into the market and it skyrockets. Wow, I'm glad I didn't hit sell market because I'm still long. So when you hit buy market or sell market, there's always going to be slippage of 1 to 2 ticks. So you're going to pay for the privilege of just getting out 1 or 2 ticks. If you do it the way I said, you will pay 2 ticks, but you're sitting on a profitable position already, and you know you're at least giving the market the opportunity to continue in the direction it's traveling. And that could mean, in this case, okay, this was a, let's see, this closed at 65, oh, I'm sorry, 66, close, 66, 68. Now 68.45 minus 66.68. It's simple. This is a trick question, right? 68.45 minus 66.68. I didn't know calculators could go bad. I hope it's not that much operator error. 68.45 minus, let's get out a pencil and paper here in a minute. 66.68. Okay. The market moved 177 ticks. $1,770 per contract traded. That thing I say about, now remember, nobody gets out at the swing high or the swing low. When you trail a stop, you'll always leave a little something on the table. Well, here's that little something. Okay. Here's your exit. This would be one to print out and stick up on your wall. Okay. Just to remind you when you're in a trade and it's going in your direction, long or short. Okay. If you appear to be on the correct side of the trade, in other words, the profitable side, we don't like to talk about right and wrong. You always do your best. You're in a, it's a trade of the week, and you feel so good, and you're just concerned that somebody or something is going to come and take it away from you, and so you sell yourself short, and you get out of your short trade or your long trade. So if you got this hanging on the wall, you might be reminded of what can happen. Now, do we always get a $2,000 move in crude every day? No. Do we usually see some volatility? Yeah. Up here yesterday, was it? I guess so. By 69.05, and it ran up to the zone overhead. And then we had something 69.05 to 69.35. So from 69.05, oh, that was a radio trade from the day before. Now I remember. Yeah. When I said, you know, by the time we get together tomorrow, one of these two things will happen. It wasn't anything special about this market. It's just, that's just what markets do. Anyway, so from 05 up to 70, that's 65. So that's a $650 per contract move. Up and back down. 650 up, 650 back down. moves like this. Now there was a fundamental element to this sell-off today, but keep in mind they didn't release the inventory numbers until 10:30 Eastern. Okay, so let's see. Well, the open of this candle right here, that's 10:30 Eastern. That's when the inventory numbers come out. Kind of seems like somebody let the cat out of the bag early, because somebody seemed to know that it would be more profitable to be on the short side of crude than the long side. Hey, but we're not given to conspiracy theories, so we just take it for what it is. Gladly accept it, gratefully. Now, there are some in our midst who've been trading long enough that they realize that there is the potential for this to go leg and retrace, and then we're going to get another leg to the downside. Okay, so that's very possible. Do you want to, if that's what you're thinking, are we going to risk everything? No. I would suggest that you take your exit signal. If and when price, and eventually it will, of course, when price does pull back to the BBC, down close, sell the open of the next candle, minus one tick. Don't treat it any differently, but we know that when it pulls back to the BBC, just like over here, when it pulled back, it ultimately failed. It pulled back, it tried to rally, it ran into resistance, fell. Okay. Now here, as this pulls up to the BBC, when we start to get that down leg, this is going to act as support. And so as price is drawn to it, your question, okay, you got the resistance you wanted here. Now, is this going to provide support here? It very well may. Okay. So it looks like that, but turned upside down and much larger. It could just hit that BBC and just keep on cooking. So you've taken an exit, you're flat, and you're gonna wait. Now, some people try to get cute and clever and fade the trade, as they say. We're in a down trend, and they understand all the dynamics of what has just happened in their own trading methodology, or whatever it is that how they think about markets. Well, since I know price always reverts to the mean, and we've crossed, I'm just gonna get long, because I got to get my hair cut, so I don't really have time to wait for price to get all the way back to the BBC and a down close, and I'll just buy it as it's pulling back for that next down leg. I even feel good about it because I'll be going from zone to zone. So don't forget this trend line. How important is that trend line? It goes way back to there. Now you would, at this point, you would just simply shift out to a daily chart to see what the significance is of that trend line right now. Now let's see, when did we start that? That's probably not going to display, right? Let's see. There it is. Let's see what I was connecting it to. Is that going to take me back that far? If it's too far back that you can't find it, it's probably not terribly important. Although, to check on that to see if it's sure or not. We'll use this one, I guess. There was a head and shoulders last night that did not come together. It triggered the neckline, but I went through a long thing last night, so hopefully everybody will understand that, because I'm about to make it all go away. The measured move, I went through that whole, I guess we went through it yesterday. Yeah, we did went through it on the radio yesterday. I knew I explained it to somebody. And so it went halfway at part of the measured move. Now, I'm always quick to say I'm not a pattern recognition guy. I mean, I can spot a head and shoulders, but I just don't chart the markets based on the pattern so much. Not that I have anything against it or think it's not worthy, not at all. It's just one person can only see and think and do so much. So we're going to put this on a higher time frame. Go daily. Try to, it's possible that trend line was connected way back here. But on a 30-minute chart, obviously that's going to look very different. But we can certainly draw a trend line from up there. Just the top there. Now this current move that we're on, from the most recent swing low to the swing high, we are sitting at a 62% Fibonacci retracement on the daily chart. If we drop much farther here, if we start getting below $66, then the possibility of us going to $64 becomes very real. Okay, and that would be from 66 to 64. It's a $2,000 per contract trade. Now it's having this type of view of the market, understanding that 66 is really important. Now if you look left, follow the horizontal line on the cursor. Price, when it finally broke up through 66, it held it on a pullback, and it held it on the pullback, it held it on the pullback, and then it went. When it came back to 66, it held until it didn't. Now we get below 66, and now it acts as resistance. What was once support becomes resistance. That's in Technical Analysis 101. We break back up through, back down. 66 has not been touched again yet, but when it does, when it is 66, yeah. And when you go back to the 30-minute chart and the range chart that we use in the live trading room, you have a higher level of understanding market dynamics right now. 66 being taken out, technically it speaks volumes, and the move to, if we take out 64, I'd be very surprised if we take out 66. I would be stunned if we don't go to 65, and I'd be really surprised if we don't go out to 64. That's just from looking at this chart. Okay, so now I don't want to have to, what am I going to do? Put on a short trade here and put my stop up here? Oh, of course not. You can't do that. Got to go to a smaller time frame to find your entry with reasonable risk, keeping in mind the bigger picture. Because when you're on the 30-minute or on the 4-tick range down in the trenches there, hand-to-hand combat, you need to be reminded of this aerial view of what you're fighting for, right? You're fighting for 64 because you believe you can get there, and the structure of the market supports that. So now that you know what it is you're fighting for, you can give it the old college try. Okay, so crude oil, how you doing? Gold. Now, this was from the post I put on the blog last night. We were walking up this price channel. If it happens, and it did. We triggered 1220, and the initial target was 1218, and the final target was 1207. So we didn't get to 1207, but we did get to 1214. And a weekly trading zone is right here at 1216. Is that right? 1216, 1215, yeah. Did you have a question, Benjamin, on something? I printed it before you spoke. Oh, did you really? You printed that crude chart? Okay, good. Oh, yeah, Benjamin, I'll put it in the... just hang on a second. I'll put it in the chat box. I put it in there earlier, but you may not be able to scroll up and see it. So just hang on a second and I'll grab it for you. Okay. Okay, guys, here is, once again, webinar 4 p.m. ET. Okay, there you go, Benjamin. I'll see you there. Okay, on gold, on the Concierge Trade Alert last night. Let me get this back up. I gotta get out of here. Gotta get up and get out. And gotta go. Gotta get to a good word for the day. Where did it go? Here we go. So the Concierge Trade Alert last night, which is different from what I put on the blog. The Concierge Trade Alerts went out at 11 p.m. Eastern, and it was probably about 3 a.m. Eastern that I put that note on the blog. So consider being long at 12:24, which we crept right up to. Got to 12:23.80. Couldn't take it out. Okay, fair enough. We also said to consider being short 1218. All right, and that took us down to 1213.60. So it's about a $400 per contract move from last night's Concierge Trade Alert. $400 per contract on the short side, 400 plus. Bonds are asleep with the rest of the animal farm. The NQ, what did we say about the NQ? Consider being long at 74.92, and we got up to 96. So that's $80 per contract, also known as a stop out. At least that's my take on it. We also said to consider selling 74.65. 74.65. Okay, 74.65. The swing low, 74.42. So 65 minus 43. $240 per contract available. If you sold 74.65 at the swing low, that's what was available. What you're able to take out of that has to do with where your stop loss is, how closely you are trailing, all that stuff. Now, is there a zone in there? 74. Yep, sure enough. In fact, 74.50. Q. Sell 74.65. Okay. So, all right, yeah. So the zone, let me just put it there so you can see it. So that was the trade to target, if you will. 74. 50. $74.50. So price came down, hit the zone. $74.49, $74.50, and $74.65. Okay, this is worth taking note of here. 74.65. Okay, what did price do? Price didn't just fall away. Important prices, important area thing. Okay, so we come through 65 and we drop to 53. Is that 65? Yeah, 65. And that low is 54. So it's about $180. Then it gets back up over the trigger. Important prices, important areas, and then it gives the full move. A leg, a retracement, a leg, and a retracement, all in one candle. Can they do that? Yeah. A leg and a retracement, a leg and a retracement in the same candle. And all of a sudden, we're headed in the other direction. Leg, retrace, leg. It's just what the market does. And it's how it does it. And when you understand that, and when you realize that you don't know what's going to happen next, neither does anybody else, no matter how convincingly they say it. They may have a really good idea. I mean, they may be masters of fundamental and technical analysis. And they might have a pretty good reputation for that, right? But it's only the person who, at least in the confines of their own mind, can look himself in the eye and say, I don't know what's going to happen next. When you reach that point, there is great hope. As long as you live under the illusion, and that's what it is. All the vendors that line the street to Wall Street, they're selling an illusion. It's like what the serpent told Eve. You can be like God. Well, these vendors on the way to Wall Street, they're telling you, you can know what's going to happen next. You can. Except you can't. I know that, you know that, we all know that. But yet, we still halfway listen and look, you know. We see some kind of indicator on somebody's chart that we've never seen before, and it's like, oh, wow, what's that? You know. And then we spin off into a whole nother universe of checking it out, looking into it, and back testing it, and tracking it, and oh, it does go on, doesn't it? You bet it does. Soybeans, okie doke. Last night, last market. Soybeans, consider being long at 9.10. 9.10. So this thing got cooking about 1:30 in the morning, 1:30 a.m. Eastern. All right. Consider by 9.10. That's way up here. About there. Soybeans pay exactly the same as the S&P, $12.50 per tick, $50 per point. So from 910 to 912.75, that's 2.75. $125 per contract. That was $12.75. Yep. And so then important prices, important areas. Except this time, as we trigger back up, look what happens. You only go to 11.5. Then this drawdown, this is more than 2 points. So from a discretionary standpoint, that's not a problem. It's not an issue. If you were trading in the live trading room, that would be an issue. Okay. If you don't understand that, come to the webinar today and maybe I can help you with it. And then we rally again, and it takes us up to a high of 914. So that's 4 cents, $200 per contract. And then back and forth, back and forth. So yeah, when price starts to oscillate in the area, you know it is, and we see that a lot with the zones. You know that is an important price, important area, and prices, the market's trying to sort itself out. Buyers and sellers who don't even know each other are trying to arrive at some kind of an agreement as to the value of soybeans or the S&P or gold. Or look at this thing, it walked right up to it again and it still hasn't managed to get over the 2861. How frustrating to sit through all that time. But that's part of being a trader. Unless, well, you know what I was going to say, but I won't. Let's go to the good word for the day. Covered all the markets. Yesterday we started talking about fear. The most often repeated phrase in the Bible, fear not. Lamentations 3:22 and 23. His compassions fail not. They are new every morning. Henry David Thoreau said this: don't be afraid that your life will end. Be afraid that it will never begin. Really? What does he mean by that? Any ideas? If you let fear take over your life, you'll never fully live. The truth is, many of our fears are totally unfounded. Perhaps you've found that to be true in your own life. Studies show 95% of what we fear is baseless. And the rest are things that we just have to learn to live with. Perhaps the best approach is to adopt the attitude of the poet Gertrude Stein, who said, considering how dangerous everything is, nothing is really frightening. Considering how dangerous everything is, nothing is really frightening. Gertrude Stein. Humanly speaking, there are no guarantees in life. We look to many things to protect us: insurance policies, burglar alarms, traveler's checks, aspirin, umbrellas, GPS, airbags. But the truth is, life is dangerous, damaging to your health, and will eventually kill you. Okay, so let me say that again. The truth is, life is dangerous. It's damaging to your health, and life will eventually kill you. Might as well live to the fullest. Eat, drink, and be merry, right? Shakespeare said this: "He is not worthy of the honeycomb that shuns the hive, because the bees have stings." Don't let fear keep you from taking small steps in your development. You never know where they might lead. There are two things that are ever present with us in life: fear and faith. And every day you live, you choose one or the other. Jeremiah chose faith. He wrote this: "Through the Lord's mercies we are not consumed, because his compassions fail not. They are new every morning. Great is your faithfulness. The Lord is my portion, says my soul. Therefore my hope is in him. The Lord is good to those who wait for him, to the soul who seeks him." Lamentations 3:22. Well, in that regard, we could all stand to be a little more like Jeremiah. The Lord is my portion, my hope is in him. The Lord is good to those who wait for him, to the soul who seeks him. That's something we can live by, don't you think? That's our good word for the day. 2 more days of how to deal with fear. I believe today's told us to trust in God. Not life, not banks, not aspirin, not umbrellas. Not even traveler's checks. Do people use those anymore? I don't know. Okay. Webinar, 4 p.m. Eastern. 4 p.m. Eastern. The link to sign up for the webinar, if you would like to attend, and it's open to everyone. Throw it in the chat box just one more time in case you somehow didn't get it. There it is. All right. That will do it for today, this Wednesday, the 8th day of August, 2018. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this: there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.